Hey everybody, welcome back. Sive is here with the ForexPeaceArmy.com. Let's have a look what's going on the euro. So in general, on a daily chart today, I do not use even any fib levels because probably today we do not need it. Actually, things that we discussed yesterday, we spent approximately 10 minutes yesterday to explain all background, explain why this downward action could continue, how crude oil prices now makes impact on your performance, and why we should be prepared for a collapse. So today I will not repeat everything that we said, just acknowledge a few things. First of all, on the daily chart you can see downward action happens, market's coming to the oversold area. But what even more important, that if you take a look at the weekly chart, you will see that market drops deeper after minor pullback that we talked as a stretch pattern has happened. Market dropped again and now stands deeper in a oversold situation. For the financial markets, this is not normal. So usually it happens only due to some significant driving factor, either fundamental, geopolitics, economical factor that a bit surprising, or has the constant pressure on the perspective of some asset. In our case, this is euro currency. Indeed, as long as the price of the crude oil remains high, and actual natural gas as well, as more negative impact will be on the euro. We explained it in detail in the last weekly report when we take a look at some data statistics suggesting that European Union economy is just turning out of the stagnation period, showing minor but positive gross domestic product numbers, but this really could change very soon if the collapse in the Middle East will continue. Second moment is market is coming to so-called natural support resistance area. So if you take a look, it's approximately around 1450. If you take a look slightly lower, it will be around 114 area. So somewhere around 114, 114.50, as we said, it will be next destination point. So now we're here. It means that currently at this point is not best opportunity for taking new shorts. So currently we do not consider any new shorts. On the full time frame chart, the target that we already mentioned, currently we could point it again. First of all, it's the XOP that I mentioned yesterday. It's 1420 area. And take a look, that's an extension of this small stressing upward swing. Unfortunately, we haven't got the butterfly, or better to say, the starting point of the butterfly was very fast. So in fact, it's something like this. But anyway, target remains the same. So it also agrees with 114, approximately 10 area. So 114.10, 114.20 will be the nearest target. That might be reached because on the daily chart you could see that market has minor room until the low bottom of the oversold area. So theoretical market could try to touch it today, and we'll see what will happen. But anyway, due to the oversold conditions and end of the week, we suggest no new positions right now. Returning back to our trading stops yesterday, this is just for reference. I do not have any new ideas here, but just have a look how it has happened. So with this thrusting down, pullback has happened, as we said. It was smaller, so it was just the nearest resistance area. If you remember, we talked about kind of the bread and butter sell. And we said take a look if we'll get lucky, so you could try to use this retracement for position taking. It hasn't reached the 116, which would be really perfect in current situation, but we've got just the 30% and then collapse has happened. So this head and shoulders once again explains why I 2 days ago said that always consider chances for taking position near the neckline. By the two reasons, it is safe, because in 80-90% of the cases market starts to form the shoulder. Very rare it breaks it without any shoulder. It happens sometimes, but not as often. Second, automatically you will be prepared for possible failure of these hand shoulders, I mean big pattern, for free. Because when the market appears in the point when the failure might happen, your position already will be in positive zone. So you risk nothing with that, but could get really big advantage with this. This mostly demands from you the analysis of the overall background, what the chances of the failure of this pattern. So we said that chances really high, explained it with the crude oil prices, and based on the situation on the ground in the Middle East, what is going on, the military operations, what the stage they haven't suggested any drop in the price of the energy. That creates our trading plan for 2 or 3 sessions. Now it's mostly coming to an end. For the taking long position, also I wouldn't hurry up. First of all, just because of the overall background is not friendly for that. Second, we do not have any good support area, and we do not have any solid bullish patterns and suggestion that could suggest a possible reversal. So currently, I wouldn't consider the long positions as well. So that in towards what we have. Yes, it's some kind of the report where we do not have any new setups for trading. We're just finishing the yesterday one, but for the next one probably we'll have to wait until the next week.